Good afternoon. Hey BL, how are you doing? Let me just make sure everything's connected. Hey Ayakame, how are you doing? Hope you guys are all well. You can see me okay, hear me all right, let me know. Hey Jack, hey Owen, good to see you. Just to let you guys know, whenever I'm looking to this side, I'm looking at the laptop screen, I'm looking at trading view, I'm looking at the chats. So just in case like I keep looking to this side and you're wondering why. The visual and audio is good, fantastic, thanks for that Owen. We'll give it a minute before we get started. We are seeing dollar strength recover a little bit since the FOMC meeting minutes release this morning. I was going to say late last night, but it's more like early this morning. Hey David, how are you doing? Hey Gash, how are you doing? Alrighty, let's get started. So again, thank you all for joining me on this daily market analysis. If you are new to the session, a big welcome. Drop a message, say hi, let me know where you're joining us from. And if you haven't already, do click on the link there to join us on the Discord channel as well. And for all the regulars, a big welcome back and good to see you again. Good to see your nickname again. Right? During this daily market analysis, what I'll do is I'll look at the charts, I'll look at the news, I'll do a review of all those. We'll look for some possible trade setups. Just a big reminder, this is all on the H1 time frame. Mostly intraday trades, something that we're looking for today through to tomorrow until we speak again tomorrow at the same time, same place. Alright, if you have any questions at any point in time, please feel free, put it into the chat, let me know. And if you can help me out massively, do click that like and subscribe button on whichever platform you are joining us on. With that, hey, good morning Diana, how are you doing? A quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product, and your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. Everyone trades a little bit differently, everyone has a little bit of a different risk profile, risk acceptance, different capital amounts, different style of trading. So please remember that you want to do your own analysis, use this as a bit of a sounding board just to check back on before you jump into your trades. Okay, don't take this as do not take this as a signal service. With that, if it's all good, we'll get started. Let's go ahead. Diana, thank you. Very great. Traded CHF, JPY, pound, yen. Yeah, Diana, good job. I hope you made some good trades on that, made some good money on that. I haven't heard you trading the yen pairs that much. So good to see that you're trying out the Swiss yen and the pound yen. Let me know how you went on that. Hey Jimmy, how are you doing? Good to see you. Okay, so since the last time we spoke yesterday at 3 p.m., what we had last night at 9:30 p.m. GMT plus 8 was the Canadian CPI data that was released, right? Canadian CPI, which is an inflationary growth number, trimmed CPI, well, we'll start with the first one, common CPI year on year, 4.4 previously, expected 4.3, came out 4.2. Trimmed CPI 3.7, expected 3.6, came out 3.4. 3.5, I was expecting a 3.4 below, so it came out 3.5. While the median CPI year on year, again remember median is the general ones of goods and services, while trimmed is without the 40% of the most volatile items, while the common ones purchased by consumers which have similar price variations over time. Okay, so we look at these two as the main ones, the median and the trim. Median CPI in this case was 3.8, revised slightly to the upside to 3.9, expected 3.6, and it came out at 3.6. No major surprises here from the Canadian CPI data release, right? No major surprises here, and because of that, what we saw on the Canadian dollar, right, on release of the news, I'll put a vertical line, oops, there at 9, right, because there was no big drop in inflation growth. What we actually saw was at 9, the Canadian dollar, or the US CAD, the loonie, actually sat there and pushed to the downside, right? Because it did not have that big slowdown or the significant slowdown in inflation growth, leading to, which would have led to the Bank of Canada having less likelihood. This is pretty much on pace, right? So we did not see a big push to a big weakness on the Canadian dollar. We actually saw it sitting right across along that 1.37 level, right? It pushed down to 1.37, broke through slightly, but then sat right across. Now looking like it's pushing back up a little bit, mainly because of that recovery in strength on the dollar index. So that's what we're looking at, and that was the result of the CPI number from the Canadians last night. Following on from that, hey Kuspa, let's trade crypto. We can look at crypto. There was something very interesting I posted just then. D-Train, how you doing? Goju, how you doing? Hey Bjorn, good to see you. Hey Christina, how you doing? So what else do we have at 3 a.m. early this morning, 3 a.m. GMT plus 8, we had the FOMC meeting minutes release. I did not stay up for this. It was just a little bit too early in the morning for me, and I did not think that we would see massive changes or price volatility because of the meeting minutes, right? And this is the meeting minutes that was released. Wait, let me just double check. Is this the one? Yeah, this one. There was a statement I was looking at. Okay, so this is the meeting minutes that was released. Right, the main thing that we had here was developments, no big surprises there, review of the economic situation, expanded at a strong pace. So it was relatively good news in terms of the GDP number, or their view that it was a good news in terms of GDP. And then also, where was that line I was looking for? That real GDP had expanded at an unexpectedly strong pace in the third quarter, boosted by a surge in consumer spending. And where was that line I was highlighting? Okay, there we go. Discussions agreed that economic activity had expanded in a strong pace in the third quarter. Jobs gains had moderated since earlier in the year but remained strong, and unemployment rate had remained low while inflation had remained elevated. Okay, so what you can gather from this is strong pace, economic activity, strong pace, good news. Job gains moderated but remained strong, still good news. Unemployment rate remained low, still good news, while inflation is elevated, but we have seen the data that shows that it's slowing down. Inflation growth is slowing down. Then we come to the point where agreed that assessing the appropriate stance of monetary policy will continue to monitor implications, prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. What this means is that they're still talking about, hey, we might still increase rates further if CPI of inflation does seem to be climbing back. We've seen that happen already once, or we've already seen that happen on the Aussie dollar or on the Aussie economy, where inflation or CPI data did have a jump last month, October last month. Right, we did see a jump in the CPI number, which led to the RBA increasing rates. So they're not ruling this scenario out. Although CPI now in the US is slowing down, there could be at times a surprise and you could see CPI jump, and then we could see the Fed Reserve take on the decision to hike rates again. Okay, so because of that lines, or those lines to show that they're not fully decided on holding rates forever or looking to cut, and they're still considering possible rate increases. That's why we saw on the dollar index here at that, I found the support here, and then it really started to, let me move this aside, really started to push to the upside. You can see at that 2 a.m., 3 a.m. time, pushed up and continued climbing to the upside. Okay, so that's why we're seeing that recovery in strength on the dollar index. Now, if you check the CME 2, you would see that, right, just on the 20th, 2 days ago, there was a 0% chance of a rate hike, 99.8% chance that they're going to hold rates at the current level, and a 0.2% chance that they were going to cut rates at the 13th of December meeting. Now, after the meeting minutes was released with the idea that the Feds could, or have put possibility of a rate hike back onto the table if the data requires or signals, what we're seeing now today is that we're back to a 94.8% chance that they're going to hold rates at the current level, with a very slight chance of 5.2% chance or probability that the Feds could hike rates on the 13th of December. Right, so you can see that 20th of November, if you look at the dollar index chart, 20th of November, during this period, you can see the dollar index tracking to the downside, because the idea that the Fed Reserve was done with the rate hikes led to a downward push on the dollar index. Now, again, back to the 22nd, we're back to a small chance, a 5.2% chance of a rate hike, leading to the dollar index pushing back up, right? Pushing back up again. So these are all factors that are driving that strength or weakness on the dollar index. So all good so far. Let me know if you got any questions. Hey Desiree, how you doing? With that said, then looking at the news, what else? Governor Bullock speaking from the RBA, economic outlook and monetary policy at the Australian Business Economists Annual Dinner. Probably not going to do too much. Now still driven by the dollar strength scenario. Autumn forecast statement from the UK, unemployment claims from the US, 231k, 226, probably going to stay around the same level. Consumer sentiment looking like it might have a bit of an improvement from a 60.4 to a 61.1. Revised UOM consumer sentiment might show some upside again for the dollar index through to tomorrow, or early tomorrow morning. Governor McCallum speaking from the BOC. Probably not going to be a policy comment. And then tomorrow I'll tell you more about the PMI numbers from the Eurozone, from the UK, for the manufacturing and services PMI. We'll talk about that during tomorrow's session. Okay, and also Japan on a bank holiday tomorrow for Labor Thanksgiving. Might see some movements on the dollar, on the yen, and also tomorrow. Okay, tomorrow sounds like it's going to be a bit of a boring day right after our session, because we are also seeing a Thanksgiving for the US, so markets will be, or anticipated to be, quite quiet from tomorrow onwards, possibly even through to Friday. Okay, so yeah, we have Thanksgiving coming up in the US. With that, then looking at the charts, do we have much to be thankful for? Probably. So dollar index, we were anticipating for it to trade lower down to that 102.80 level before bouncing back up. It beat me to that. It did not trade as low as I expected before pushing back up. In fact, it found a little bit of support. It found some support here at 103, almost 103.20, right? So we were just there. During our session yesterday, broke out, tested 103.20 again before pushing back up. So generally this just happened a little bit earlier. Was expecting a deeper continuation to the downside before a retrace. Did not do that. It sat right across and pushed up. Now that it has broken that 23.6 and that 38.2, we have that 50% fib retracement level to consider, right, as a main level. And what I would do at this point as well, now that that channel is broken, we can take that away. 50% being there, and I think 61.8 just right at that resistance level of 104. Okay, and we can see this point being quite a crucial level all the way through back to the 4th of September, 4th and 5th of September. So what I'm looking out for here is that today being the 22nd of November, we've seen the dollar retrace to the upside. What I'm looking for here is a reaction. And again, remember that tomorrow is Thanksgiving. Tomorrow is Thanksgiving in the US. So imagine if you were a institutional trader, or if you're a main trader in the US, in major markets, knowing that you're going to be on a holiday tomorrow, you're probably not going to be taking too many positions today, right? Or very short-term positions today. So what I'm anticipating here is that price could climb up towards this level between 50 and 61.8 retracement level. So only a slight move up towards that 104 level, but it might consolidate right at or right just below that 104 resistance level. Okay, so we're looking for dollar index to strengthen slightly, recover in strength to 104 resistance level, could consolidate there. Okay, so it could do that. So recover in strength to that 104 resistance level, could consolidate there. Could it break through? Not going to rule that out, but I don't see any major reasons here that could push it up a lot. Maybe consumer sentiment, maybe some weakness in the other pairs, but I think that what I anticipate would be, actually not that, what I anticipate would be a little bit of a retrace and then a push back up. That's why I think that it's going to spend a little bit of time retracing, maybe back down to that 103 maybe 103.60 level or 103.65 level, retrace a bit before consolidating along that 61 and 50 retracement level. Okay, so overall looking at some strength on the dollar index. Let's change that a little bit. Continued recovery in strength to 104 resistance level, could consolidate there. Yep. Okay, so we're looking for that to happen. All right. So with that idea is that we're looking at dollar strength coming across or being shown across the other currency pairs. Hi Hiker's Diary, how you doing? Hey Serene, good to see you. Hey Angel Case, good morning. Hey Jamil, good to see you again. So now looking at the Kiwi dollar, that trade from last night or from yesterday did not trigger. We'll take that away. Trend line broken, so that's taken away as well. We do have that support level broken, well and truly broken now. Pushing to the downside, bouncing back up a little bit. I would say that because we're anticipating a bit of a retracement before dollar strength continuation, maybe what we could be looking for here would be a test and a reject back down. Okay, so this is a support turned resistance level. I'm keeping this point here. I haven't moved this line right up to the yesterday's high because of what we see here on the 29th, 11th of October, 15th of November. It's held this level quite well. So it tested up, broke back down. Let me zoom to the 4 hour and have a quick check. Right, so you can see that. Yep, so that looks fair. Back to the H1 time frame. I want to see that happen, so we could be looking at a test and reject 6030. Stop loss no more than 30 pips. Take profit could come down to about 80 pips to the downside. All right, so I'm looking for that, about that 60% level. Let me just check one more thing. Yesterday, took 5 trades, 3 lost, about 40 pips, and 2 hold in profit instead of right. Which trades were the 2 that you held on, Jamil? Let me know. So that's broken 38.2, 50 is right there. I'm looking for a retest to break down again. I want to see it come down to this previous level. In fact, we can even go a little bit lower, almost 90 pips, almost at 61.8, which was held from before. I'm just thinking whether that's going to retrace or whether we should look at 50%. Okay, I'm happy with that. Okay, so what I'm looking at here on the Kiwi dollar is 6030, 30 pip stop, almost a 90, no, we'll keep it at 80 pip take to the downside with a bit of a hesitation at 0.6. Okay, so that did not happen. We look to sell 0.6030, stop loss 30, take profit 80 to the downside, possible hesitation at 0.60. Okay, there we go. Let me just check this on a possible retracement. So yeah, I'm looking for it to come down to about that 23.6 level, bounce and reject back up. Might come down to just between that 23 and that 38.2. So we're looking for that to come down to around that range, maybe around that range before pushing back up again. So I'm happy with that. And we'll look at these levels. Right, we look for it to break, bounce, and break back down. 61.8 at 0.6 with that take profit down there. Do you ever consider the session highs and lows as AIOS? What's AIOS? Terrible for abbreviations. I don't really consider the session highs and lows, but yeah, let me know what are AIOS. Okay, then with the Aussie dollar was obviously that did not happen, so we take that one away. Was sharing this in the Discord group. Oh, sorry. Hang on a second. All right. Was sharing this in the Discord group where we highlighted a possible head and shoulder pattern here on the Aussie dollar H1 time frame. Neckline was at 6545. The last hour, that 2 o'clock timing, it broke that neckline, was looking for it to hit lower. Kind of came to that support area at 6525, bouncing back up because of that slight dollar retracement anticipated. If you did not get into that on the Aussie dollar, right, on that break of that neckline, you would have something like that, about a 25 pip and a 70 pip to the downside, right? That would be a head and shoulder trade to the downside. If you did not get into that, what I would do right now is wait for that retracement, right? Wait for that retracement, but I still wouldn't rush in. So it could do this back up and come back down and do all that. What I would be waiting for on the Aussie would only be if it breaks below this support level. So I'll be looking for 6510, no, a bit higher, 6515. Maybe we can go 6510. 6510, 20 pip stop, 40 pip take. That's what we'll do there. Alright, so we see that head and shoulder pattern there is broken a neckline, now retracing because of what's happening here on the dollar index. So what I want to see is a retracement before a continuation back down. 6510 on a Aussie dollar. We're still looking to sell this down 0.6510. Did I get that right? Yep. 20 to 40. 6510. Stop loss 20. Take profit 40 pips to the downside. There we go. Okay, if it continues to the upside, then I'll still wait because there are still a lot of levels here that we needed to clear before we're looking for further upside potential on the Aussie dollar. Okay, I'm happy with that. We're keeping an eye on how the dollar index performs, right? If that retracement is going to become even deeper, then we're going to change the views, or is it going to bounce off this level? Then on to the US yen. Okay, so US yen, very interesting. We had two good trades over the last 2 days, 50 to the downside, another 50 to the downside, 100 pips on the yen, and then it finds this support at 147.30. Very strong support. You see that it came down here, bounced off, came down here, bounced strongly to the upside again. Now came down to this level and bounced. So we take that away. That's done. Those two are done. We got 50% right there coming up. 38.2 is being tested right now. It's almost broken, or it's kind of broken, but it's being tested right now. What I would be looking out for on the yen would be if the dollar breaks past that point. 149.20. All right, look at 149.20. If it breaks that 38.2 well and truly broken, it would be right close to that 50% level. What you could be looking out for is 149.40, a good 55 pip to the upside, no more than 30 pip stop loss. No more than 30 pip stop loss here. So we're looking for continuation to the upside. Ever consider the session highs and lows as an area of interest? Not particularly. I think that I don't do it consciously, but it does come into a consideration. So it's not that I'm identifying the highs and the lows of the session and considering them as an area of interest, but just by identifying the swing levels there, it does sometimes tend to coincide with session highs and lows. Hope I answered your question there, Erwin. I'm just watching this because if this retraces all the way, again, it's going to throw everything out of sync. But I think it's going to sit there. It could retrace a little bit before pushing back up. Yeah, it could retrace to about, it could retrace quite significantly. Now I'm thinking that if we can go a little bit more aggressive and go 149.20 with a 70 pip take and a 30 pip stop. So we just take that point. All right, so 149.20, break past that previous level, I think that'll be okay. So US yen, we're looking to buy that up, 149.20, stop loss 30, take profit 70. There we go. All right, that makes sense. Could sit there, break past this level 149.20. We see that push up. That's fair. What I actually think could happen here is it's going to retrace back down a little bit before pushing back up. Could come back down to this level here. But it all depends on what this guy is going to do. And this one could also come back down to about this level, in between this area here, before pushing back. If it breaks below 103.50, if it breaks below 103.50, then we might be seeing a resumption of that downtrend on the dollar index. But for now, we'll keep this view. Then, hang on a second, just check that. Okay, then onto the pound dollar. All right, pound dollar did not trigger, so a lot of trades did not trigger. I was doing some other trading, which I'll tell you about shortly towards the end. That'll be the last one I'll tell you about, so you know which one I'm going to be telling you about as well. Pound dollar found a good level. This support level at 38 works well. We'll keep that there. Bounced off sitting just below this, or has been sitting just below that 1.2550 level, right? And you notice that despite what happened here on the dollar, that strength, that recovery of strength on the dollar, we did not see a massive drop on the pound dollar, very unlike what we saw here on the Kiwi and also the Aussie. The pound dollar is pretty much set in consolidation just along this 1.2540 level, right? So with that in mind, we're looking at, take that one away, this level, this previous level still holding, but I would be considering the possibility, the off chance that we see a weakness in the dollar, right? So this is an alternate scenario view, a weakness in the dollar 1.2565, stop loss 30, take profit 60, 665 to the upside. Right, it's just been sitting there. We might be looking at this pushing back up. So this is an alternate view on the dollar. We're looking at buy 1.2565, stop loss 30, take profit 65. 1.25, stop loss 30, take profit 65. All right, so we're looking for this to maybe hold, maybe that 23.6 could hold, sit in that range that it has been doing, right? Sit in that range or continue within that range, and then a breakout could see a good 60 pip move to the upside on dollar weakness. Okay, I'm happy with that. Then on to the euro. You see the euro dropped, right? Very similar to what we saw on the Aussie and the Kiwi. Very dissimilar to what we saw on the pound. That's why it makes the pound a little bit interesting. Euro dollar worked out halfway. It came down. It started pushing back up. I thought, great, could be looking to buy it up, but did not formulate, did not close above the level that I was looking for. So that trade again did not trigger. Okay, so what you notice, or what you should also take away from what we're doing here, is that with all our trade planning, trade setup planning, quite often we come to a point where we just don't get into a trade. Right? We might have all the plans, does not trigger a trade, we're sitting out, we're not losing money, so that's a very important point, because we're not getting into trades if it's not ideal. So we're not rushing into trades. But also when it does work in our favor, we see that the setup works very quickly, in the sense that once you get into a trade, it goes towards your profit level quite quickly. So that's why you must be quite selective in terms of choosing your trade or choosing your trade setup. Okay, now you see that euro dollar found that support here. Diana, I saw your question about the pound Aussie. We'll get to that. Found a bit of a support here, now bouncing back up. Let me just double check in terms of the news. Financial stability at 5. Autumn forecast, shouldn't move prices too much, these two, but we are seeing, so now this explains a little bit about why we're seeing that dollar index retrace that much. It could be driven because of the euro dollar bouncing off that 50% level. Remember, the euro dollar makes a big proportion of that dollar index. So now that it's bouncing, let me just check, 50, 38.2 right there. This is also maybe why I think that we might see that retrace a little bit before pushing back up, because euro dollar could come to this point, 38.2, or that 50% level. Okay, I'll zoom in a little bit. So I'm looking for the euro dollar now to possibly come back up, test 50, and then turn back down again. So do something like that. Alright, so that's my resistance. So look for that to happen, to push back down. Then I would be looking for 1.0920. So a test, reject, 20, stop loss no more than 20 pips. It could even be 15. Take profit, I would say, take profit, I would say could be down to 40 pips. Yeah. Okay. Just be very careful of this. It is right in the middle of that support and resistance level. We're looking for a reaction, a retrace, and then a rejection. So on the euro dollar, it is waiting for completion of retracement. We're looking to sell retracement to possibly 1.0928. Then after that, we're looking to sell at 1.0920, stop loss 15, take profit 40. 15, take profit 40. Okay. Now, Jamil is asking, pound dollar is breaking the pivot and also breaking the last low. If on the 30 minute, let me see, 30 minute, no, it's bouncing back up. Pound dollar is breaking the pivot and also break last low. Yeah, this was the last low. It's bouncing back up right now. I'll come back to the 1 hour time frame. This is the contrarian view. If we see that dollar weakness scenario on the pound dollar, we could see that continue up. What you could also be looking for here on the pound dollar, now that it's retracing, is a test and reject, right? A test and reject to the downside. In this case, I wouldn't be looking for anywhere in the middle. I would say that only if it breaks that 23.6 level, right, then you can go for about a tight stop loss, no more than 20 pips. I wouldn't think about 38.2 too much. Might be looking at 61 point, maybe at 50. Yeah, maybe that 50 level down there, so about 40 pips. So you could be looking for retrace, test and reject, break that 23.6 down, or sit there and then we see that dollar weakness come through or come back into play, and then we see a breakout to the upside. Okay, hope I answered your question there, Jamil. Pound dollar sitting in the consolidation, Aussie dollar retracing slightly but still looking for the downside potential. So looking at the pound Aussie, we were looking for that to break down a couple of days ago. Did not happen, take that away. Bounced strongly off this support level. Aussie dollar weakness is going to drive this higher. Right, if the Aussie dollar does continue to push down, it's going to drive the pound Aussie higher. Pound dollar sitting in consolidation could continue that upward push. We have a level here and another one here. That's pretty much in that area. Just checking this again, that's sitting right across. That should be pushing up to lead the pound Aussie up. That's retracing, and that's why we're seeing a retracement on the pound Aussie. What I would be looking out for, probably not too much for now, but if it does break above the resistance here at 1.9220, then you're looking for a long, tight stop loss, in this case 20 pips, take profit, good, almost 80 pips to the upside, 75 pips to the upside, right? For that move up, what we need is the pound dollar to either sit across or strengthen, and or the Aussie dollar to continue trading to the downside this way. Okay, hope I answered your question there, Diana. Erwin is, yes, considering the session highs and lows has helped me with market manipulation on popular pairs. Yeah, I look at it as market volatility. If I start thinking of market manipulation, it just makes it a little bit too hard to trade, because you start thinking of who's trying to get me, right? Or whether the big players are really trying to manipulate us out of it. I just think of it as overall market volatility, just keeps it a little bit simpler. I'm looking at that Aussie dollar retrace. I'm just thinking now whether this is going to retrace back, but it looks like even if it does retrace, it might not be a strong retrace. It could retrace down to about that point, but that's it. Good morning, Monsieur Delaros. How are you doing? Okay, so with that, then we've done all of that, to the US Swiss franc, I'll hold that same view. We say that US Swiss franc buy with a double bottom. We're seeing that double bottom become a triple bottom, become a quadruple bottom right now, pushing back down. So it is, you see here that the US Swiss franc is sitting right along. You know, when we zoom it in, it looks like there's a lot of volatility, but when you zoom it out even just slightly, you see that it's sitting in that consolidation along that support level of 0.8835. So nothing too exciting here on the Swiss at this point in time. Okay, I would maintain the view. I wouldn't even think of a trade at this point. No, actually, I'll tell you what. US Swiss franc, because it's sitting in that consolidation, you might have a straddle scenario, 8820, stop loss 20 pips. Nah, it's not worth it. It's not worth it. No, I don't think it's worth doing. I was thinking of a straddle, but I don't think it's worth it at with this range. So, because if you did this, if you tried to straddle and say 8820, stop loss 20 pips, take profit, I don't see it moving down 70 pips. Right? And if it's just down to this point, it's another 20 pips. Why would you do a straddle for only 20? And if you wanted to do a straddle to the upside, you look at that point, your stop loss would be about 25. Your take profit would be 40. Again, yes, it could happen, but not the most attractive. It could spike you into a trigger and come back into the range again. So I would say that on the US Swiss franc, on the Swizzy, it's consolidating at 0.8835. Wait for reaction / breakout. Don't do anything at this point. Okay, so nothing to do there on the Swizzy. Dollar index is still sitting right there. On to the loonie, right? We saw that, we were expecting that push up, did not happen on the CPI data release. Still sitting there, 61.8, still holding. Retracing back down a little bit right now. I see that retracing, so I think that's going to retrace and bounce, right? If that dollar strength does come back into play, we could see that bounce. 1.3725, stop loss 30, take profit 50 to the upside. We could look for that, but I don't like it. I don't like it. I would prefer to wait. If it does whatever it does here, right? Then look for it to do that, and then look to sell it back down, or look for reaction along that point. So I don't think we want to rush into anything here. It's end of the month as well, guys. It's coming to the end of the month. So I would be a bit safer and say look for a possible trade up to 1.3780, or look for reaction at that point. Too many tails and shadows here on the US CAD in the near term to identify a good entry level. Okay, so 1.3780. And also we have, remember we have the US Thanksgiving coming up tomorrow. What am I looking for? I was going to say look for reaction at 1.3780. Wait, not look, wait for reaction at 1.37 possible. Okay, there we go. Possible wedge. I think you're talking about that and that. Oops, what am I doing? Yes, I see that with that big downward push. Yes, which means that we want to see it break out of this level lower. And you know, even if we try to sell this down, not very attractive either. That's a 40 pip. Yeah, 20 to 40, but you might even go less than that because that's like previous low there. So you might have an equal low scenario before a possible bounce back up. So yeah, I would either wait for a reaction there or a reaction at 1.3650 or there. Yep, there. So I would either wait for a reaction either along that level or this level for a possible sell back down or buy back up. But in the middle right there, nothing to do. That would be how I'll approach that. Okay, makes sense so far? All good? Do let me know, put it into the chat. And again, a quick reminder, if you haven't already, click that thumbs up button on YouTube, little rocket ship button on TradingView, hand clappy thing on trading.live. And lucky last is gold, right? So did very well on gold last night, was trading that as we saw it push up, right? Yesterday we were saying break 1955 to trade to 2007. Watch out for that price level. Didn't even have to watch out for that 2000 level. It just went straight up. So it went past, it broke 1995, went to 2000, had a bit of a pause, retrace, and went up to 2007 and sat there and retrace. Okay, back down to 1995, now looking like a push back up again. So this scenario worked very well, was trading that up. Now as price is above that 2000 level, coming towards that resistance of 2007, I wouldn't be trying to bet that it will break 2007 and continue up. Right, I don't think it's going to get back up to that level, which we saw in May. Okay, so this is the level that we saw in October. Test, came back down, test, came back down, came close and came back down. So what I would be looking out for, and I wouldn't trade this because the trend right now is to the upside. I'm super trend following on the, especially on gold, is I want to see a reaction and rejection along this 2007 level. All right, and what I would be looking out for is whether it could come back down to not those levels, a test and reject back down to that 1995 level. No, actually, maybe even, because it's already done that, so it might do that. So I think that gold could break 2007, right? Could go back past that before turning back down again. Ultimately, if we drag this trend line right up, and you can see this trend line has been working out quite well twice now. We might be looking for that to do that, come back down, and then back up again. Okay, so that's what I'll be looking for, is a test and reject. Gold, we're looking for it to test and reject 2007. Look for price to test and reject 2000 level. And it's coming very close actually, but I don't think you'll get to 21. So I'm looking for a rejection along this point back down towards 1995 first off. Okay, down to 1995. So that's why we're looking out for gold, is a test reject back down to 1995 first off. All right, and you see that based on this, the last time it came up to about 2009. The high from October 28th was 2009. So it could trade up to that point, test, and then turn back down. Okay. Yeah, and most likely it's heading to the upside. That's retracing. I'm still watching that, looking for a possible bounce within the next minute or after the next minute. Jamil said retracement pivot now on the pound dollar. Still showing some retracement, just watching that on the H1 time frame. US CAD better have falling wedge. Yep, looks like that push to the downside, but it's still a bit early to decide right now. Okay, so with that, Goju has beat me to it. You're most welcome there, Goju. Hope you're well. Hope you found it useful. And if you haven't already, do make sure you join us on the Discord channel. Any feedback, any comments, please put it into the chat and let me know. Put in the feedback to me on Discord. Hiker's Diary says that I could get to 2010, possibly around that range, that's fine. And then also I did a quick post earlier today about what happened on Binance, right? So do check that out, that's on my TradingView profile there. Okay, so with that, I think it's bounced back up quite a bit. No, it's just set there. Alright, so with that, please trade well, trade safe. I'll see you on Discord. If not, then I'll see you tomorrow. Same time, same place. Take care now. Bye-bye.